Hey everyone, welcome back. Talking Success. We are going on a different route today. We are going to talk about the hugely exciting world of anti-money laundering. Hold on to your seats, everyone. We're going to try and make this as fun as possible. I'm joined by Mr. Bradley Elliott, who is the CEO and founder of RelyComply, and we've known each other for a little while, and I do sort of take the mickey out of him a little bit for being in the most exciting world of AML and how riveting his meetings must be. So I said, well, I'm going to get you on the podcast, and I'm going to try and be serious for once and talk about the real serious side of anti-money laundering, because obviously it's very topical. Anyone that's followed the news over the last sort of few months or so will know that unfortunately South Africa has been greylisted, and that has a whole raft of different sort of connotations and requirements that need to be done in order to transact internationally. And RelyComply under Brad's leadership play a crucial role in that. So I am probably going to take the mickey out of him a few times, but we are going to cover some serious things, I promise. So Brad, listen, great to have you on board. Thanks so much for joining. Now I've given you such a warm intro, I kind of expect you to kind of follow me a little bit as well. Enlighten us with some humor, right? So a bit about you. Go on, I'll let you speak for a second.
Cool, yeah. Well, thanks for having me, Darren. And anti-money laundering is actually probably quite fun. I think anti-money laundering compliance, on the other hand, is probably not as fun. But I mean, this coming from someone who specializes in recruiting, I mean, listen, it's tit for tat, I guess, right? So yeah, I mean, I'm Brad. I lead the team at RelyComply. We've been around for about 3 years. We are a single AML or anti-money laundering compliance platform. And really what we do is help financial services businesses streamline and make their AML processes more efficient while also keeping up with regulation, which, as you said, Darren, with greylisting and those type of things is becoming more and more pertinent at the moment.
Yeah, it is. And I guess I'll get straight into the kind of the nuts and bolts, but AML compliance over the years has been probably quite a manual task, although there's automations that have been built in there and what have you. But you guys at RelyComply sort of take things to a whole different level when it comes to sort of technology and using various different sort of tools, data science and machine learning and AI. Why, first of all, or is that a silly question? And secondly, how? If you're allowed to reveal that without giving away too much of your own IP.
Sure. I mean, let's hype it up with a bit of AI talk. No, more seriously, I think so. RelyComply was born out of this observation in the industry, as you said, two sides. One being very manual. So, like, how can we automate this to make compliance teams' lives much easier, more efficient, and also just more accurate, and that'll come to the data side. But also the whole market in the kind of compliance space, especially in AML compliance, is quite fragmented. So you've got very specialist solutions for each part of that process. And I mean, just kind of talking broadly, I mean, as a customer signing up at a bank, they ask you for your address, pay slips, and ID, right? And that's in South Africa, that's known as FICA. And what the institution has to do is, it's called Know Your Customer, and actually, verify that your ID is real, verify that your address is real, that you are who you say you are. But there's a whole bunch of other back office checks that take place that a lot of customers aren't aware of. Institutions have to check that you're not politically exposed or connected, that you're not sanctioned. They also have to conduct their own kind of client risk assessments on you. And all of those processes, all of those processes were typically done in a single tool or single product. What we've done is we've really come in and solidified that all in one solution, and made it and kind of given our customers a single view of their customers through this AML compliance journey. So that's one part of kind of like refining and making it more efficient. The other side is very much the data side, right? So, how do you know if someone's sanctioned or politically exposed? That refers to multiple sources of data that you've got to look at. And typically you used to have kind of just data providers and just platform providers. And once again, we provide both. And we're also able to work with third party data providers for these institutions. What we do though is we put a machine learning layer underneath all of that. So whether we're ingesting our own data or ingesting a third party's data, it's about assessing that data to make it more accurate so that compliance teams aren't overwhelmed with what we call false positives, i.e. Darren Frank signs up. Darren Frank, there's probably quite a few of you, I'm guessing. Well, not of you particularly, but people with your name. I mean, we wouldn't want too many of you, but there's many of
Well, I don't know. Maybe we should do a background check and find out how many FKBs I've got right.
Yeah, I mean, I don't know if maybe I should say shit, I shouldn't say that, but if your dad was anything like mine, there might be more of me that I don't know about. But anyway, but what I'm trying to say is like you want to reduce the number of false positives coming in. So that's one side. And then the other part of the business, or the other part of anti-money laundering, focuses more on the transactional side. And so you've got one side which is very much know your customer, and one side which is very transactional, which goes, how do we identify money laundering patterns in these vast kind of volumes of transactions that we're looking at? Sure. And that's obviously really where a lot of machine learning can come in, and we can maybe elaborate on that a bit later.
Yeah. Well, just a couple of things, Brad, because you mentioned sort of KYC, which I think a lot of people will be familiar with. You know, that's every time you have to go and do something, you have to go and get KYC'd. As you said, opening a bank account, getting a loan. I was going to say signing up for a phone, but that's slightly different because that's FICA, right? RECA, sorry. But then you've got KYB side, so know your business. And I know with my other hat on with the Fintech Association, you guys have kindly provided some services to us where, you know, we need to ensure that people that are coming into the association don't have some of these political ties you were talking about, or are not on any watch lists, or, are kind of, are good to go. Now that's kind of becoming even more pertinent now. I mentioned the greylisting, but I think even more with regulation that's come inside. We look at crypto asset providers. You know, if they are settling to overseas merchants or businesses, there is an element of KYC that has to be done, KYB, on both sides. So both here domestically, the remitter of the funds, and those internationally who are the recipient of the funds. So what other user cases are there for KYB? Are we looking at when I, as a business, as TITC, we go and open an account with Vodacom, for example, there is obviously a load of documents that we need to provide. Is that KYB? Similarly, if I go and engage with a law firm to represent me for something as TITC, I have to provide a load of documentation to the law firm as well. Is that also KYB?
Yeah, I think you've nailed it. So I think we see a huge demand in the market at the moment to get this right. And I think the reason is quite simple. If you think about what is anti-money laundering compliance trying to achieve, it's obviously trying to achieve reducing money laundering. And typically as an individual, like to money launder through yourself as an entity is not that easy already possible. I mean, you put it into businesses. And so businesses are actually where the money laundering and trusts and those sort of layering techniques are where a lot of the money laundering happens, right? So what you really want to be doing is focusing on businesses and what ultimately the compliance teams and the regulator are looking for are the people running those businesses. What are the source of funds out of that business? Like, is it making funds legally? Who are the directors? But most importantly, and this is a really tough one, is what they call ultimate beneficial ownership, right? It's who are the shareholders, but who are, and that's really where the guys get quite clever with it. So you can have a trust that holds a certain number of shares, and then that's hiding behind another trust. And ultimately what you really want to get to is who are the beneficiaries of these funds, of this business, who owns it? And that gets quite complex, right? So what you're ultimately doing is you're running the same with KYC, but you're running it on all of these individuals in one go. So I'm sure when signing up, for a law firm, you've got to provide your ID as a director. But if you've got other directors, you've got to provide all of their information, and then you've got to provide your shareholding structure, and you've got to provide this. And so typically what we're seeing is, on the one side, we're seeing very manual and cumbersome and like a lot of friction, especially from the customer side, or client side, from your perspective. You know what a mission it is to do this. So from our side, we're trying to streamline that for our customers, create really solid onboarding experiences that streamline this and automate it as far as reasonably possible. But then you also mentioned something about kind of payers and beneficiaries, especially cross-border stuff, right? And so there we've got to look at what same thing as before, sanctions, pegged individuals on each side when a payment is actually taking place to see, are they sanctioned? Are they pegged? Are these businesses, because some businesses may be pegged, some countries may be sanctioned, and you don't want to be doing business with a business in a sanctioned country. So you've got to be looking at all of these things, and that's really where we're pulling in all of this data, building our client risk assessment scores, and then obviously more on the payment side, actually looking at each entity and seeing where are they, who are the beneficial owners, who are the payers, where are these funds coming from. Those things are really important.
Okay, I've got a question for you. Might be a bit controversial, but I'm going to ask it anyway. So let's use the law firm example. When I go and approach a law firm and say, "Can you act for us as TITC?" They say, "Sure, send us all your documents." I send all my documents, and I'm pretty sure, because I've done this recently, they did not ask me to consent to any form of data protection when it comes to background checks of directors and shareholders. Now, I have nothing to hide, no problem whatsoever, and I can speak for my other sort of directors and shareholders. But is there not an element here that says there's a bit of an invasion to privacy? Or maybe there is, but clearly there's legislation around why you have to do this. Is there not a conflict between things like GDPR and the Poppy Act here in South Africa? How do you navigate that? It sounds quite complicated.
Well, you've got to be compliant within the realms and frameworks of those acts. So, I mean, I'm sure that maybe the law firm that you signed up with must, in some way, shape, or form, in their T's and C's, even if it wasn't very prevalent in their onboarding documentation, state that they are going to process this data, that you consent to allowing them to process this data. At least with one that we're working with or engage with at the moment, that's very clearly stated in their onboarding documentation. And yeah, I mean, they have to run these checks by regulation. They have to run them. So, I mean, you have to be POPI compliant. You have to be within the realms of GDPR. And even in terms of data storage and protection, I mean, you're talking about highly sensitive data. So, I mean, even from our side, I mean, the security that we have to implement on our systems has to be, as secure as reasonably possible. Nothing is 100%, I mean, we've seen it with massive organizations getting hacked, but we've put all the necessary processes and procedures and systems in place to do that. And we have to be compliant. And on top of that, you've also got regulators, which you've got to almost maintain this data even post the fact. So even if you offboard a customer, you still have to retain the data for sometimes up to 5 years, sometimes up to 10 years. It depends on the regulators, on their regulation effectively. But yeah, I think to your point, it's not that controversial. I think you will be given consent in some way, shape, or form. You will be acknowledging some terms and conditions somewhere along the way.
And then talking on data, the data you provide to your customer, again, let's just use this law firm as an example. Do they just get a kind of green, amber, red? So saying, yeah, fine, bit of an issue, or hey, don't touch. Or do you provide them literally a whole report based on that business and the shareholders and the directors and the trusts and what have you?
I mean, with our system, I guess it depends on platform to platform. The way our platform works is very much a kind of green, amber, red. So what we're trying to do is typically what you get in this space is someone comes on board, there's an issue, it creates what is called an alert. In our platform, we call that a case. And our compliance person or a back office person, or whoever, maybe an onboarding specialist, has to go look at that alert and go, well, what has gone wrong here? Has there been a mismatch in the ID? Are they sanctioned? Are they picked? Don't they meet our client risk assessment scores? Blah, blah, blah. I mean, typically we just try, that's why I was saying we use a little machine learning. We try reduce the number of alerts and cases that are created because that's not necessary and it overwhelms your team. But yeah, with us, it's kind of, it's either actually just green or red for a lot of the processes. The only place that changes is, each company or each business, like a law firm, will have their own client risk assessment methodology. And that's basically looking at all the information you give them and going, based on all of this information. It could be country you come from, it could be the type of business you are, it could be a bunch of things, right? Where is your money coming from, the source of wealth? They go, we think this person is either low, medium, or high risk. And
Yep.
depending on where you sit on that spectrum, they will then decide whether they want to onboard you as a client or not. And an additional layer, which is not a regulatory layer, but more reputational risk, is then looking at adverse media. So going, is Darren in the media for, I don't know, corruption or money laundering or whatever it may be. So that's more of an enhanced due diligence process. That usually only happens on your medium and high risk clients. But yeah, so it depends. It really depends. But yeah, it really is. We typically don't provide a whole report. We provide a match score. We're like, listen, it's a 99% match that this person is sanctioned, or there's a 99% match that this person is a PEP. But we don't divulge the sources necessarily of the data when we get much.
Sure. And I suppose just to make it clear, this is all focused on AML. This is not looking at people's social media sort of posts because they may support X or Y.
No.
This is purely focused on the legislation around, AML.
Correct. It's not looking at political views and those sorts of things. Yeah. Unless they are like posting on Facebook that they're money laundering, which I don't think they would be. Although you never know.
Oh. Yeah, you never know these days, right? Some probably made the TikTok video of how they laundered money, but anyway. Okay, so let's talk world of fintech. And we've got lots of fintech players across Africa who provide various different products and services, either to consumer or B2B. How would you help them with? I get the AML side, and obviously that's very, very important from a regulatory perspective. How do you help them onboard customers? Because I think everyone is looking at how do we streamline this process. I can name a payment service provider here in South Africa that I tried to onboard with and quite frankly gave up because it was just more hassle than it was worth. How do you help, or how will you help maybe in the future? Maybe this isn't right now. Maybe this is, RelyComply 2.0. How do you think you can help fintechs onboard customers faster, more accurately, and more seamlessly?
Well, I think there are two ways that come to mind kind of immediately. The first one is just the fact that you've got a single integration point. So if you do have, let's say I can talk openly about this. We've got SnapScan as one of our customers, right? They onboard a lot of businesses, merchants, both sole proprietors and larger businesses. And we've managed to streamline their onboarding process, kind of saving them I can't remember the figures off the top of my head, but we've saved them a number of days in terms of actual onboarding of businesses. Because it took, you would think it would take a couple of hours. It took days to onboard a business. We've actually reduced that significantly. And I think they've got existing, let's call it digital touch points, right? You can go to SnapScan's website, you can sign up with a merchant. And so how we help them there is that we're a single integration point. We've got an API, like most tech businesses, but they're not having to integrate like I mentioned right at the beginning of the podcast, kind of, you've got usually 4 or 5 different services performing all of these checks and balances. We're one single kind of black box, middle layer, if you want to call it that. And so it's one integration point that helps them first and foremost. The second part that helps them is that it's highly automated. So all of these checks and balances, once you hit submit, so if you go onto their site, you upload your ID doc, you upload your CIPC docs, et cetera, you hit sign up. We run all of those checks and balances in kind of under 200 milliseconds. It's all done. It's all dusted. We're making all the calls to the various services. And only if there's an issue will you then, as a customer, experience some sort of delay. So only if your ID hasn't checked out, et cetera, will then, and going back to the point of false positives, you don't want, that's what typically happens, is that you get 95% or plus of the cases or alerts that get created are not real. They're just like, actually, no, that Darren Frank is not the sanctioned one, make him a customer. So that's a one side, right? Then you've got a whole bunch, which is we're really seeing a lot of, and this is not necessarily RelyComply 2.0, but this is on our roadmap to roll out in the first quarter of next year, is that we're building a very, very sort of flexible and customizable front end for businesses that don't have these digital touch points, which is a lot. You'll be surprised that don't have like websites where they're onboarding merchants. They're doing stuff, a law firm's great. I mean, did you sign up via a website for your law firm? I doubt it was probably via email. Probably email the
Yeah.
person, right?
Yeah. Yeah.
Cool. So why do that? Like, let's send, a link that's highly secure, correctly branded, all those sorts of things. Allow that customer to come onboard themselves through the process. It gets the use cases get really like complex but fun in a way, because as a business, you need to invite another director to fill in their details. So as opposed to emailing all the shareholders and going, hey guys, please send me all your CFPC docs, you just invite them. I mean, this is the way we envision it. You just invite them. They then come fill in their details. And once it's done, the process is done. So we're trying to really streamline that entire onboarding process by giving businesses that don't have these digital touch points the ability to create them and brand them, obviously within limitations, so that they can make the customer onboarding experience better and faster.
Sorry, I was smiling there because you used the word fun, and then you were like, "Oh, we can."
Well, fun. The challenges are fun, not for compliance.
Yeah.
The challenges are fun. The challenges of solving these weird, like outlying use cases are fun, but the actual process of onboarding is not fun.
Ladies and gentlemen, that's the fun side of AML for you, right?
That's as fun as it gets. That's as fun as it gets.
Jokes aside, because this is a serious topic. I think enabling any business who perhaps has digital infrastructure, so a law firm, most of them are highly digitized, but when it comes to the onboarding, you still get sent through a PDF, and it's a pain in the backside to start filling it in, and then you sign it, and then you have to go and send it to someone else and they sign it. You might use an e-signature site, but then you've got to upload it. Just to have a link that you can send to someone and go, hey, listen, just fill in the blank, or fill in the form effectively, is so much easier. I can think of hundreds of thousands of user cases of companies that require this. They may not necessarily have to conform with AML regulations because of the type of company they are or the business they service, but as good practice to be able to onboard a customer, even if it's silly things like, I need to know the billing address of the customer, I need to know their VAT number, I need to know their CIPC document, and I really should have a copy of their CIPC document because that's kind of good practice. Yeah. Just to be able to have that, when I think about it, I think ticks a number of boxes. You mentioned earlier in terms of the balances and the checks that you make, and it's obviously based on various different criteria that the customer would need to put in. How does that transcend to other markets in other geographies that perhaps aren't as sort of advanced in terms of the data that's available? They don't all have the equivalent of CIPC that we have here or national ID numbers. How does that work? And again, a follow-up question, so you can answer them both at the same time. If I'm not a South African resident and I don't have an ID number, but I have a passport number, does that further complicate things as well? And how do you navigate that?
Yeah, it's a great question. It's a really, really good question. So I'll look at it from one from a regulation point of view and then one from another data point of view. So some jurisdictions may have regulation that's lighter than ours and easier. That's just a configurability kind of thing from a platform perspective for us, right? We just configure the platform to whichever jurisdiction you operate in. The data side is a really, really interesting one because, as you said, like even in South Africa, let's take a look at it this way. There is no register for shareholders and companies. CIPC is busy doing that now. CIPC is busy saying, listen, you guys need to submit. And same with trusts, right? The Master's Office is now saying that all trustees and beneficiaries need to have, by regulation, IDs uploaded, kept on file, etc. So when you don't have these single sources, you're right. I guess, most countries to be operating, it is much harder in Sub-Saharan Africa, although we have nailed a few of these markets, is that they do have central sources. Otherwise, you've got to be plugging into multiple government sources, and often those can be down. The other thing we do is we just partner with really a lot of third-party data providers, right? Like credit bureaus are really good. They cache and hold a lot of data. They've got fast amounts of it. And I'm talking really more around the less developed countries here. Europe is very well covered. Southeast Asia, those places. I mean, Russia doesn't want to be covered, so they leave that aside. America is well covered. So you're really just talking more about really more developing countries. But what we do is we actually just integrate with multiple data sources to make up basically a holistic view of this customer. Where it gets tricky or trickier is stuff like being politically exposed. So that's why I said in the beginning, you've got businesses that are typically platform businesses and businesses that are data businesses, and some of the incumbent data businesses actually have like 600 researchers sitting at desks going, who is Jacob Zuma's wife? Who is his cousin? Who is this? And like actually building out those lists day by day by day by day. I mean, we use, I think, slightly more sophisticated methods that would get very much similar coverage. But yeah, it's a great question. And like that is a battle, right? That's always going to be a battle.
And I suppose off the back of that, if I'm trying to onboard a new customer in, I'm not going to mention a country, right? Doesn't really matter where it is. And their data records or that sophistication of their data by country isn't necessarily there. How would you be sure, or what balances and checks would you be able to do to make sure that individual shareholder isn't sanctioned, isn't part of any other sort of areas that you look at? Does that then take a bit more time because you have to manually go and check that? Or do you raise that as a flag and go, hey, listen, this is a flag. You as the customer need to go and investigate this more?
Yeah, I think, from a sanctions and PEP data perspective, the data is pretty rigorous, right? I mean, there are multiple sanctions lists. We're integrated with with all of the major ones. From a PEP perspective, as I mentioned, as each business, each AML provider has got their own level of coverage in terms of PEP, and some focus more on Europe. As I said, we've got quite broad coverage. Where it really gets trickier is more like the identity verification, address verification piece, because you don't have those integrations with central sources, like maybe the equivalent of a Department of Home Affairs and those sorts of things. And that's when you've just actually got to, they will have some records, but typically you will find this data does exist. You've just got to triangulate it between kind of multiple sources. And so that's what we do. That's how we help our customers, right? We've integrated with multiple partners around the world to ensure that we can triangulate data from these areas and give like a high degree of confidence that it is accurate.
Okay. I want to sort of get your crystal ball out, if you can, your AML crystal ball.
How exciting.
Fun and, anyway. And we look at some of these new technologies that are coming out. Let's specifically talk about, we've mentioned crypto a little bit, but let's talk about blockchain. Once a business, has been KYB'd in terms of, okay, I've now TITC, we've engaged with this law firm, they've run the checks through RelyComply, we've got the green light. Can that then be set on record on a blockchain, or it doesn't have to be a blockchain, on your database? So when company B, I go to a bank and I want to open up a new bank account, and they run a check, and you automatically go, hey, know these guys, green light, we've got other customers that are using them. Can that be done, or does regulation require that each time a merchant or each time a business onboards a new customer, they have to go through those checks every single time, because obviously things change? What does the future look like in your world, in your very fun world of AML? And do you think the likes of blockchain, can help streamline things and can make things more accurate? Because obviously, it's irrefutable the chains on the blockchain by its very nature. So what's your view there?
I mean, listen, I'm not a blockchain expert, so let me just start by saying that. But in theory, the idea of centralized data or shared data is really nice. In practice, it can get difficult, to your point. So what stops it at the moment is basically some of the regulation you pointed out into both in terms of GDPR and POPI. So there's a privacy data issue, number one. Like, I as business A cannot share your data with business B when you have not consented for that business B to have your data, right? As simple as that. There's a regulatory requirement, as well as you mentioned, where as an accountable institution, the regulation states that you may not hand off or kind of outsource your compliance or AML compliance regulation, right? So you can have tools and platforms like us, but we couldn't go and actually work the alerts as a business for you. You would have to do that. You cannot have a third party looking after your actual compliance function, if that makes sense. So that's what the regulation states. Where I see the future of this becoming really a lot more powerful is less on the KYC side or KYB side and more on the kind of transaction monitoring side. So maybe just give a quick definition of transaction monitoring. It basically is looking at a huge volume of historic transactions to identify patterns of money laundering. Like there's fast inflows and outflows of money. This product is being used for why when it shouldn't be. There's a bunch of rules and there's a bunch of patterns that can be picked up. Now, what happens is each financial institution, this is more applicable to transactional institutions like banks that are processing huge volumes of transactions. They have to report these transactions up to the regulator. They don't have to take action on them, but they have to report them. It's not the institution's responsibility to investigate. It's the regulators, right? So there's a reporting requirement that's required, and they've got a certain time frame in which they need to submit these reports in order to be investigated. And that's, we can go to greylisting and why I kind of think it's ineffective later on. But now, if you've got all of these financial institutions that are like submitting all of these reports across all of these transactions, a really good use case or scenario of this, like looking into the future, would be to like actually have a more shared kind of view, either across those institutions, but like all banks are working together to kind of look at transactions between all of them and their institutions, as opposed to like reporting in these silos up to a single regulator who, to be quite honest, doesn't have the capacity or capability to look at them holistically. Alternatively, the regulators need to get up to speed and go, amazing, we've got like 17 banks sending us reports. Like, how do we identify the patterns across all of these transactions, not just a single bank's transactions? So I think that's where a use case. When you start talking about blockchain and like, yeah, I mean, in theory, from a KYC and KYB side, of course, it's a decentralized database, so if you can have that level of verification, sure. But I guess there's more regulatory constraints there than practical constraints. My CTO will probably watch this and kill me and say, you're wrong. But that's my view.
But I think you can see from, a digital identity, having a verified digital identity as an individual makes a hell of a lot of sense, right? Because it means I can go up to Vodacom, MTN, FNB, whoever, and go, hey, this is me, scan my code, and you know who I am. I don't have to go through all those checks and balances. I guess for a business though, especially for a larger business with more complex structures where they've got different shareholders, they've got different trusts, they've got different ownership.
A director gets you're a CEO of an AI business and your board fires you without any warning. Those type of things. Now you've got to remove yourself from the blockchain because you're no longer the CEO or director. Then they beg you to come back 2 days later, and now you've got to get added back on again. So these things become tricky.
You know what? It's Monday the 20th of November. I'm not sure whether Sam is CEO or he's on the board or he's
I don't think he knows. I don't think anyone knows.
No. You know what? We're digressing a little bit here, but I just think this is one big PR stunt, hey, because how you can make that sort of noise in a market, and it'd be interesting to see what Microsoft shares do when the market opens in a few hours' time. But, anyway,
I think one thing I've learned being in this space is that don't underestimate the lack of governance in any of these big tech companies. We've seen it in Uber, we've seen it in WeWork, we've seen it in FTX. I mean, literally like approving payments on Slack. Like governance is not, And I'm not even really compliant. I'm not one of those people.
This has happened for years, right? I remember HP bought a company in the UK. I can't remember the name of the company, and they uncovered like a year later that there wasn't anywhere near the kind of revenues or profitability or money in their business that there was. And you're going, surely
check a bank statement.
Does some due diligence, right? Surely. Anyway,
surely SoftBank do. Surely Sequoia do. No, no, it doesn't work that way.
On that note, so listen, Brad. we've spoken about some of the future of sort of where AML could go to or compliance can go to. We did touch on crypto, but maybe we should give it a little bit more airtime because it is quite a complex area. We've got legislation coming in here in South Africa. We've got other countries in Africa that are trialing CBDCs. We've got other countries that are, banning crypto, trading full on. Egypt, crypto is just completely disallowed, even though I think they have the highest number of crypto traders globally, which is bizarre. Anyway, where does the future sit for you guys in the world of AML and compliance with crypto, which by its very nature should be decentralized? We've then got DeFi, which is kind of the next sort of iteration of financial services, completely decentralized. That seems to be very, very complicated, given by its pure definition, this is sitting outside of the formal financial services sort of industry. How on earth do regulators regulate this when it's been designed not to be regulated? How do these companies ensure that they can't be charged by the SEC for AML, money laundering, for financing terrorism, etc., etc.? It seems to be that, or it seems to me as a layman, that this is the world of AML is about to get a hell of a lot more complicated when these new sort of nodes and DeFi platforms and what have you start becoming mainstream, which they may or may not. I'm not suggesting they will, but what's your view? There's an expert in this space on how that's going to change the landscape.
Yeah, I mean, this is as you said, this is a very deep, complicated topic, which we could spend many hours on. I mean, my kind of top line view is that there's nothing wrong with crypto, right? I mean, there's absolutely nothing wrong with an alternative base of, let's call it, currency or being able to transact. I think the appeal of it was that, no one knows, who the crypto belongs to, and that kind of anonymous kind of trait that crypto tends to have was very appealing for a lot of people. But why is it appealing is what you've got to ask yourself, right? And it's typically appealing because you're trying to evade tax, or maybe you have a certain philosophy that the government should know what you own or have. And some of these things may have merit, and some, not tax evasion, but other things, and money laundering, right? And so I think in some way, shape, or form, like the regulation of crypto is a good thing. Like, I think we see this with all technologies that are very cutting edge, that are used for these sorts of like applications. There's a phase where it goes really, really quickly, and then unfortunately it needs to be regulated to a point in order for it to be adopted at mass and give people the security and comfort that they're dealing with. Otherwise, you'll end up with stuff like FTX and those sorts of things, right? So if you've got nothing to hide, I mean, you're looking for an alternative way to transact. That's what you're looking for, right? You don't want to use money. You don't want to use cash. You don't want to be beholden or believe that maybe a central reserve should dictate how much your dollar or rand is worth. And that's all okay. Then you invest in crypto. But unfortunately, the rules of the world still apply. Like, you still have to pay your taxes and do those sorts of things. So, I mean, there's guys that specialize, there are companies that specialize in what we call like on-chain transaction analysis, like Chainalysis. I mean, I'll call them out. They're a brilliant company. We don't want to get into that space because they've just got it so well covered and they really are experts in it. But from a KYC, KYB side, I think you've got to look at it like you're any other business. You're signing up for effectively a financial service, because that's what crypto is. Crypto is effectively, in some way, shape, or form, whether it's decentralized or not, it is a financial service. So I think there will be a partnership. And I mean, I think you saw it at Fintech Summit last year, or Fintech Africa, I can't remember, last year, where it was very much like mentioned around the regulators working with crypto. And that's what it is. It's about working together, because let's be honest, compliance and regulation, they're not great for business. I mean, I'm going to call a spade a spade. They slow things down. They're often not logical. No, it's true. It's true though, Darren. It's bureaucracy. Some of it's a lot of bureaucracy. It doesn't actually have an effect on the outcome. And so I think if you find a good balance between the two, it'll work well. They've got to work together, because ultimately, like, regulators are seeing crypto as bad, crypto is seeing regulation as bad. So how do you find a middle ground? Because unfortunately, the truth of the matter is, when you start breaking it down to like the real impact isn't like, okay, cool, I'm taking money offshore or I'm evading some tax. The real use cases or the real impact is, Russia arming its army with, freaking weapons to attack another country, or vice versa, or extremists, extremists, whatever it may be, like, arms dealing, terrorism, human trafficking. Those are the real impacts at the end of the day. Yeah.
No, they certainly are. I just had a thought as you were talking about that, and many of you know, if you've been listening to this, that one of the supermarket chains in South Africa now accepts cryptocurrency as a form of payment, which personally I just don't get. But are you going to have to now be KYC to shop in a supermarket? I mean,
no, it'll be the wallet provider, right? The wallet will.
Right, if that, yeah.
It's like saying if you go spend money, if you've got a credit card, you go spend in a retail shop, because that shop accepts credit card, do they have to KYC you? No. The credit card company, or actually the bank, has actually KYC'd you. And the same thing will happen here. If you sign up for Luno or any of them and you've got a wallet with them, they've already had to go through the process of doing that. So they are the accountable institution, not the retailer.
Not the retailer, because that wouldn't be a nice experience, having to get KYC'd every time you want to
No, definitely not. Although, if you want to pay in crypto, maybe you deserve it, I guess.
Yeah. Well, I agree. Brad, listen, thank you. I've really enjoyed this conversation. I'm not going to ask you to stand up because I know you're wearing your socks and sandals underneath your t-shirt. So I won't want to dispel too many myths about the fun side of AML. But all jokes aside, this is a really, really, really serious topic. And I think, had these checks and balances and companies like RelyComply been taken more seriously, in previous years, maybe South Africa would have found itself on a grey list, which I know it's battling obviously to get off, and there's task teams and they're doing some amazing work. But, don't underestimate the importance of companies in the reg tech space who are not only trying to make things more seamless, more compliant, but are playing such a pivotal role in ensuring countries like South Africa and other countries in Africa are perceived and have the right sort of controls in place to be able to conduct business on an international stage. So, Brad, thank you. I've really enjoyed the time. I know we can wax lyrical for hours, and we'll do some more over a beer somewhere. Is there any sort of last words? Where can people find you and you guys and your team, who I've had the pleasure of meeting as well? And they're all very cool, by the way. Very cool.
Thanks, Darren. Yeah, well, I appreciate you having us. And we could get into that conversation, but nice to know that some of the work we're doing is hopefully having an impact. I think there's a larger systematic issue, but we won't get into that right now. But people can find us at www.RelyComply.com. And reach out to us there. Always happy to help. We're working with a number of large financial services institutions in South Africa, the UK, Switzerland, and Europe. And we also work with fast-scaling fintechs to help them kind of get their compliance or AML compliance in place as well.
Amazing. Brad, listen, thanks so much.
Thanks, Darren.
Your pipe and your smoke, and you can go and sit back in your 1920s armchair.
I wish it was like that. I think having worked and run in multiple startups, there is no pipe and armchair. But we'll get there one day.
No. It's what we aspire to, right? It's what we aspire to at some point. Yeah.
Exactly.
Thanks so much again.
Appreciate your time.
I'll see you in Cape Town soon.
Definitely. My pleasure. Thanks again, Darren. Cheers.